NASDAQ goes parabolic. Here's what you need to know before the bell. So over the last few trading days, of course, following NVIDIA's announcement and talk more about the AI and generative AI revolution, NASDAQ stocks in particular have been taking off. And we've seen a very sharp rise now in the NASDAQ. The NASDAQ is now more than 3 standard deviations overbought from the 50-day moving average. That big gap is likely unsustainable. And of course, one of the things that we talk about, quite often is that markets don't go just straight up. You're going to have pullbacks and corrections along the way. Those will provide you a better entry point to get into positions that you want to get into. Again, chasing stocks after they've already moved a lot tends to not work out very well. Again, markets have had a big rise here. Markets are now very overbought on a relative strength basis. So if we take a look back historically at the NASDAQ, just over the last couple of years, what we see here is that every time the market has been similarly overbought in terms of relative strength, that has been kind of a short-term peak in the markets, not just during the bear market that we saw last year, but we also saw this even during the previous rising trend from 2020, 2021, is that peaks in relative strength also lined up with short-term peaks in the markets. Again, corrections during a bull market, and again, we're likely in a bull market now for stocks, at least from the October lows. Those corrections would come back to the 50 and the 100-day moving average along the way. So again, as you take a look at your portfolio, this is probably a good time if you've been real heavy technology stocks or were in technology stocks last year, have recovered a lot of those losses from last year. You may want to look at taking a little bit of profit off the table. That doesn't mean sell everything, of course. That means just reduce your position size a little bit. And again, we're likely going to have some type of short-term correction here back to the 20 or the 50-day moving average that will provide you a better opportunity to add to those technology stocks in your portfolio. This also kind of goes along with what we talked about in yesterday's report on the website about the technical review of the market. What hasn't been working, of course, is the other 426 stocks in the S&P 500 that have not gone up a lot this year. Again, this has been a very one-sided trade. It's been technology, communications, discretionary. Basically, it's been Apple, Google, Amazon, Microsoft, and those companies. The rest of the market, utilities, real estate, materials, financials, have not been performing well at all. They've been a big drag on the markets. So this correctional process, we could see a rotation into some of those more defensive names short term as we go through this kind of corrective period. Now, this doesn't mean the market has to pull back here. The markets could just go sideways and allow these moving averages to catch up and work off that overbought condition. But regardless of how this works out, two things is that taking some profits here, likely not a bad idea, at least in the short term, and look for a bit of rotation into other areas of the markets that have been really underperforming this year. That could go along with the fact we do continue to see weaker economic data. The City Economic Surprise Index has been declining. So again, a correction sometime this summer wouldn't be surprising at all. The big news today is whether or not the debt ceiling limit will pass the House. That'll be the next movement for the markets. But regardless, taking some profits here, certainly not a bad idea. I'm your host, Lance Roberts, and that's what you need to know before the bell.